Greetings, greetings, greetings. You are now tuned in live, listening to The Vault. This is episode 254, Account versus Bookkeeper. Definitely appreciate you all for tuning in live, listening to replay. Always appreciate everybody that tunes in live or listens in the replay. Once again, this is The Vault, 254, Account versus Bookkeeper. Definitely want to do this episode because we get consultations all the time, even trustees. This is like one of the biggest hurdles for entrepreneurs, investors, 100% through and through, is they literally have an issue with, we got to go find an account. We got to go find an account. We got to go find, that is a struggle for many entrepreneur investors that contact and reach out to the Vault. Even trustees, they're like, we got to find an account. First of all, as an entrepreneur investor, it's not legal advice, ladies and gentlemen. This is just business 101. You are responsible for the books. You're responsible for the numbers. As the fiduciary of the business, of the company, you're responsible. How are you managing the books? So let's talk about that. At the end of the day, the accountant doesn't manage the books. The bookkeeper doesn't manage the books. The bookkeeper keeps track of the books. That's it. The accountant, most of the time, on the public side, the accountant usually files the taxes. That's what the accountant usually does. They call him a tax preparer. You can even say the accountant is just a tax preparer. Now, a lot of people want to just pretty much take their business accounts. Appreciate Mississippi for tuning in live, listening to replay. Always appreciate the love. Appreciate it. So, a lot of people think that the accountant is a tax preparer. They confuse it. A lot of people just give the books over to the accountant at the end of the year and say, here, I need you to go through the bank statements, and you go through with a highlighter, and you either highlight one is income or one that's a deduction. Okay. There's a problem with these type of philosophies. First, that's lazy. Second of all, what it puts the person in that position is they're going to charge you more because now you're giving them tedious work. So we're going to give you a couple hacks in this episode. We're going to give you some tricks of the trade, because the trick of the trade is you have a bookkeeper. All great business people have a bookkeeper. That's the person that's keeping track of the books from month to month. That means from day one of the month to whatever day you're going to close the books out, whether it's the last day or the day before the last, whatever. And they're keeping track of that, ladies and gentlemen. They're doing monthly P&Ls. Ladies and gentlemen, you all can do monthly P&Ls on QuickBooks. That's a monthly P&L. You're going to have 12 statements that say income expenses. 12 monthly P&L statements. You can get to the account at the end of the year. They can do a last head check of it. And the taxes are done pretty much, ladies and gentlemen, because not the tax, but the accounting is done. Not the tax, the accounting is done because it's already been accounted for throughout the year. So one of the things that we tell a lot of trustees, because they're end up going to get ripped off by these accounts. These accounts, they're going to rip you off. They're going to tell you that, we are going to charge you $500. Most states that you all are in, except for California and New York, because California and New York are just expensive places to do business. So California and New York, they're going to say a lot more than that. They could charge you anywhere from $700 to $1,000 just do books. Well, you got a bookkeeper to do books. You could probably get a good bookkeeper, and even in those states, for $300. But in most other states, you can get a good bookkeeper for less than $400 a month. All that person's going to do is from the beginning of the month to the end of the month, they're going to go through that bank statement, and they're going to account for what are expenses and what are incomes. Bottom line, what is income? What is an expense? And that month is done. And every month you have a bookkeeper. The bookkeeper is the most cost-effective way to go through handling the business. That's the route to go. A lot of the trustees and people should be looking for bookkeepers, not accountants. Why? Because do you really need an accountant to file a tax at the end of the year? You can give it to a tax preparer. A tax preparer can file it because they have a tax ID number. That's it. That's it. Did you know you can fill out your own tax form and give it to the tax preparer and say, look over it, submit it? Why? Because at the end of the day, who's responsible for the books? You are. The preparer is just the person that submits it. So this is why we encourage you all to really make it a point to just minimize the cost, because we know a lot of people that are having issues with finding these accounts. Oh man, I'm having a hard time finding an accountant, but because they don't know trusteeship. Now, if people came to the vault and said, we need someone to submit the taxes for the trust, that's not what they say. They say, does the vault provide accountants? Do you all provide accounts? We don't. You want to actually be in contact with those people. You want to be able to put your hands on them if you can. So if you don't want to have all of that cost for an accountant, if your company's not big enough, especially a lot of new companies, even new companies, why not go find a bookkeeper for $100, $200 a month? All they're going to do is go through the bank statement, create a monthly P&L, profit and loss statement. Create the monthly P&Ls. But how many people are going to do this? How many people are, oh, I got to find an accountant. I got to get a CPA. That's what the Small Business Administration. How come the Small Business Administration doesn't tell you all to get a bookkeeper? Because the people that work for the Small Business Administration are some old geezers that work for their accountants. So why would they tell you to get a bookkeeper? They're an accountant. That's like a lawyer telling you to have a paralegal around for legal documents. You really don't need a lawyer at times. Why? Because the lawyers are for litigation. You can literally have a paralegal do a lot of that work for you all. Create operating agreements, create corporate bylaws, to create small amendments to documents. Who do you think is writing documents for the lawyer? The lawyer. The paralegal. So, you all have a lot of alternative from the bookkeeper and the accountant. The accountant versus the bookkeeper is really letting you all know you have an opportunity to minimize your expenses and still stay in compliance, still have your books look good, still be able to do things at the end of the year with flexibility. That monthly P&L, you all can contact somebody through Fiverr. You all can contact somebody locally. Yeah, I can even contact local accounts. Hey, instead of an account right now, I need a bookkeeper. That's it. Go into the bank. Ask them, do you know local bookkeepers? The bookkeeper is what you all need. The accountant, what do you need an accountant for? What do you really need an accountant for? Are they running reverse transactions and forward transactions? You might need an accountant if you're in real estate because they can help you with depreciation and investments. But for the monthly P&L statement, the bookkeeping is what you all want to make sure that you all are looking into. We just wanted to share that jewel in that gem so people can actually go out and get results. The way that you get results is by putting in the work. You can grow the company if you don't have all this overhead and then doing things the wrong way. If you just went and got a bookkeeper, you wouldn't be worried about taxes at the end of the year. Why? Because you know your monthly profit and loss for 12 months straight, 11 months straight. You know the profit and loss. That's called income and expenses. A loss is an expense. Did you know that? A loss. That means if you invest some money and it don't come back, it's a loss. What do you get taxed on? Profits, capital gains, returns. If you invest money and you lose it, it's a loss. So, bookkeeping is more important than the accountant. You want to make sure that you get a bookkeeper. You want to get those people locally. They're around you. Reach out. Google it. Look through the yellow pages, the white pages. Look through it. Go to your local chamber of commerce. And guess what? At the local chamber of commerce, they always got these accountants. But guess what? You all can find a bookkeeper. They're there too. You can even ask an accountant. I don't need you to do accounting. I need you to do monthly bookkeeping. Can you do that for an extra $200 a month? Who doesn't want an extra $200 if they're an independent person? Appreciate you all for tuning in live, listening to replay. This episode was for the people that are having issues saying they got to find an accountant, or they have an issue finding somebody to do the books. Look, and keeping the books in order at that. Monthly P&Ls will save you at the end of the year because you're only going to have 12 P&Ls. 11 P&Ls. How many people are doing this? This is why the businesses fail, ladies and gentlemen. Simple little things like this. Bookkeeping over account. Appreciate you all for tuning in live, listening to replay. Feel free to share with your friends. Contact Christian at trustchristian.com if you want a consultation. Feel free to reach out. Peace.